Hi guys, I welcome you in this wonderful video. So you see, one of the best trading methods or approaches that a trader must master, it is trend trading. This is one of the best methods because this is where you are likely to make a lot of money when it comes to riding a trend, because that's where the money is, that's where the profits are, because that's where the market kind of like move in the same direction for a longer period of time. Meaning, if you are able to predict a direction in a trending market, it means that you'll be profitable as long as the market is moving in that direction. So this is the best place or best approaches to make money in the market. It is like to esteem trends higher than any other move in the market. So in this video, I'm just gonna be breaking down to you on how to actually ride trends or on how to trade trends when it comes to volatility 75 index or any other volatility index out there. So when it comes to riding a trend, you know, guys, that the basic or the most important thing is that we have to identify a trend. And I know that a lot of you guys know how to identify a trend. It is not something hard. You just spot a pattern of higher highs and higher lows. That's equal to an uptrend. So if there are higher highs, if you see highs getting higher and higher and higher, it means that it's an uptrend. And if you see the highs getting lower and lower and the lows getting lower and lower, it's a downtrend. So that's so basic. So firstly, you have to see that now the market is moving in a trend, because usually what we traders do is that we get delayed. We get delayed by previous data. For an example, we focus more in the past than in the present. That's why we like to analyze a lot. Why? Because analyzing the market is all about checking the past. So we as traders, we enjoy looking at the past, and looking deeper in the past doesn't actually put you a step ahead. It actually drags you back. Why? Because it means that whatever you look, or when you analyze the market, you'll always be a step behind. Why? Because you only enjoy to spot patterns that have already formed. You enjoy to spot flags or channels that have already formed in the past, but you don't focus on what is happening at the moment. Meaning you will only focus on what is happening here after the price is gone. So this is very, very crucial, guys. When it comes to trend trading, you need to be focusing on what the market is doing at the present. For an example, if you see that now the market was flowing with huge momentum on the downside, and now all of a sudden it breaks this channel and it begins to give you a high, you should then expect another low or another high to see where it is. For an example, here we get a low which is higher, and then we get a next high which is a little bit higher again. So this should give you a signal that no, something is wrong. It's like the buyers, they are coming in the market. Obviously the sellers are going to try to fight. For an example, here we saw a fight trying to break this low, but unfortunately they failed here. They failed here. So you can see that this is another low again. So after this low, that's where a new trend began to take off. So if you focus on these current moves or on what the market is doing at the present, it will be easy for you to identify a trend. So after you identify the trend, it is very, very important, guys. It is very, very important that you approach this with a clear mind, that you secondly understand or try to identify the trend's unique flow. The trend's unique flow. How is the market behaving? How is the trend behaving according to its own move? How did it start out and how is it behaving? Meaning you don't approach the trend with preconceived notion. You don't approach the trend with information that you already know. You try to analyze the trend with a clear mind and understand what the trend is doing itself uniquely, not according to what you know. That I know that trends should be like patterns, and then the pattern break, and then on the breakout I buy. Sometimes it will not behave in that way. So it is very, very important to understand the flow of the trend. For an example, let me just clear up my drawings. For an example, in this area here, you can see that the way the market was moving, I wonder why is it so hard to select this drawing tool. The way the market was moving here, you can see that there wasn't any clear demonstration of power. There was like a mixture of both red and green candles. But in some areas, you'll find that the waves, the impulsive wave is made like of green candles only. Those who are familiar with V75, you know that sometimes impulsive wave, they will be made with only those favoring candles. For example, in this case here, we can see that it's only green candles, it's only green candles even here, it's only green candles even there. So usually impulsive wave, they are so aggressive, but here you can see that sometimes we have impulsive waves which are a mixture of both the sellers and the buyers. So you have to identify that's the uniqueness of the market, so that you will know what to trust, what to trade, which trade to avoid, and so on. So that's very, very crucial, guys. You analyze a trend according to what the market is doing on that particular trend, not on what you know as a trader. I hope that one is making sense. And then once you identify that, it is very, very crucial for you. Even what is very, very important, guys, it is the corrective waves. Because remember, these impulsive waves, that's where we'll make money, but this is not where we're gonna enter our trades. We don't enter our trades in this impulsive wave, but we enter our trades from a corrective wave. Meaning, when what we watch more, it is a corrective wave, because that's when we're gonna take an impulsive move from a corrective wave. It's just like a relay that we don't focus on us, we focus on the one that is gonna give us the stick. So which is the corrective wave, meaning once you identify the pattern or the way the corrective waves flow. For an example, in this case, you can see that the corrective waves, they are not in a manner of a pattern. It's just like a flow of sellers candles, a flow of sellers candles, a flow of sellers candles even there. So you just understand that, and then from there you just buy after the flow is being broken. When it's broken, you buy. When it gets broken, you buy. When it gets broken, you buy. And even here, you see that there was sellers and then the flow was broken. One can say, okay, why don't you point this as a buy? Because the reality is we're going to see this as a flow which is broken, and we're going to be tempted to buy here. Yes, you should buy, but this leads me to my next point, which is in trend trading, you have to analyze and reanalyze. You don't just analyze here and say you buy, and then your market kicks you out to the stop loss here, and then you go and watch Netflix, you forget about the day. No, when the market kicks you out, because this is a trend, you wait again and reanalyze. When the market gives you the next opportunity, then you take that opportunity. When it kicks you out again, you reanalyze again, you wait for that opportunity, you take that opportunity, because that's the only secret for accurate or for early entries. It is to analyze and reanalyze, because we don't have a crystal ball to kind of like predict the future or so on. So we just take chances from what we know, from what we see. So if you enter and the market kicks you out, it's not the end, man. It means that you just like entered a little bit early. So just wait for the right time, and then when it comes, you enter. The good thing is that the money that you lose here will not be compared to what you're gonna make, because this is a trend. It means that you're gonna make a lot of money. So I hope that is making sense. And when it comes to stop losses, the key to profitability or the key to success, it is adjusting your stop loss correctly. Because like I've seen a lot of people, they'll be like, the market is moving, I'm buying my stop losses here. When I see it here, I put my stop loss here, and then all of a sudden this wave comes and kicks me out. Why did that happen? It is because you adjusted your stop loss too early. What I always recommend, okay, on Forex markets, you can always like put your stop loss on the most recent low, but usually on volatility indices, you have to give the market gap or time to maybe kind of give you like two waves. Why? Because things like this usually happen where you see like a corrective being bigger, breaking their previous low, yet it is just a fake breakout of this low. Let me just clear it so that you can see. You can see like the market breaking this low, yet it is a fake breakout. For an example, you can see here that the market just bounced back in and came inside the pattern. So this breakout, you shouldn't allow it to kick you out if you have a stop loss here. Maybe in terms of trailing your stop. Now, if you are entering the market for the first time, it's good to put your stop loss here. But when you're trailing your stop, you have to give it time. When you enter here, let's say you enter here and you put a stop loss here, allow the market to bounce. When it goes up, don't just immediately put it here. Just allow it to form another corrective. Then you can kind of like adjust it here. And again, wait for the market. When you see that it prolongs for longer than it had before, then you can move your stop loss here. And again, when you see another corrective and so on, you can move your stop loss here. And see, when I point here, I didn't point below a low. So it doesn't mean that you have to be like fixed to lows. You can move your stop loss according to market momentum. When the momentum is too much or when the move is very long, don't be lazy or don't be lagging. Follow the market on its heels. So just follow the market. There is no need for you to have your stop loss here while the market is all the way up there. There is no need. Do you see this gap? It's a huge gap. So just kind of like push it up here halfway. So again, if it happens that your stop loss is smashed, it doesn't mean that it's over. You have to again reanalyze. When the market gives you another opportunity, you re-enter again, you buy, the market goes up. So that's how you deal with the market. You reanalyze, you re-enter, because this is a trend. That's how we're gonna make money, by re-entering and reanalyzing. So thank you guys. I hope this video was helpful.